Welcome to Launchbase, a fast-paced podcast exploring the latest in tech funding and product launches. In under 30 minutes, we break down key trends, interview industry leaders, and uncover what's driving the next wave of innovation. And now your host, John Radford.
Hello, and welcome to another episode of Launchbase. This is the podcast that dives into all things tech in under 30 minutes. So I'm your host, John Radford, and each week we chat with individuals shaping the tech landscape. So today I am thrilled to be joined by Katie Dunn. She's an investor, board director, startup advisor based in New York City. With over 25 years of experience in commercial real estate and finance, Katie has transitioned into the startup ecosystem, and she's focused on helping founders secure funding and scale their businesses. She has been instrumental in helping founders raise over $27 million by refining their communication and fundraising strategy. Katie is also a board member at Outcast Brands, Fierce Foundry, and the Infuse Foundation. So in this episode, we're going to delve into her journey from banking to angel investing and discuss what she looks for in a startup pitch, common pitfalls that she sees, and the initiatives that she's currently passionate about. So Katie, welcome.
Thank you so much, John. It's really nice to be here. We've been LinkedIn friends for a long time, so it's nice to have
Yeah. Actually, we'll get on to that, because it's kind of it's not a new thing for me, but, it's a thing now, this kind of LinkedIn phenomenon, and you have kind of like these LinkedIn friends, and some of them you connect with, some of them you don't. Talk through that actually before we get into you, because as you mentioned it, I don't want to sort of miss out on that opportunity to talk about that. Talk about your LinkedIn thing and how that's has that been a big part of your your personal brand and personal journey?
It is everything. It's the entirety. Yes. When I was in corporate, so I left corporate 3 years ago.
Right.
And I couldn't really, we weren't allowed to be on LinkedIn. My company didn't really allow us to post. And in fact, we were blocked from LinkedIn.
Is that because you might say something wrong or offensive or whatever?
Yeah. And they also, they literally blocked it from our work computers because they didn't want you looking for a job on their time. So, which makes sense. But LinkedIn has become so much more than a job search site, as you know. It's like business social media. It's business, it's a way to present yourself. 2.5 years ago or so, I committed to posting 5 days a week, every day at 7:30 a.m. Eastern. And I went from under 1,000 to over 15,000 in that time.
That's pretty good.
There's other people that are way better than that, but for me, I know my followers are getting stuff out of it. I get good engagement, and
100%.
I've met you and other people, and I love your content. I absolutely you and I. Well, we talk a lot about the same things, and it's very reinforcing though to see your opinions on things, and you meet these other people that are in the ecosystem, and it's just really rewarding. And but building my personal brand, building my, my client base, partnerships, all of that, I attribute all to LinkedIn, honestly.
It's super powerful. But actually, so just on a flip side, is there a potential that it might become like a bit of an echo chamber for a lot of people, where it's just like you're getting the same people reinforcing your content every day? Hey, way to go, man. This is so awesome. Love it. Even if they don't, because they know that you're going to do it back to them and blah, blah, blah.
Yeah, I do think that can be there's like LinkedIn pods and stuff like that. I don't.
Yeah, right.
In those.
It's so obvious when people do those. So just
I
stop
agree.
It. Yeah.
And it doesn't feel authentic. I write every post. I will admit I wrote every post for 2 years.
Yeah.
100%. Yeah. And then I've now trained the GPT to talk in my voice and use my content. So I use it for idea generation, or give me a story that this happened, whatever, that is true and real. And then I edit it myself. But it's really important for me to be authentic. And I've never participated in one. I just don't do it. Yes, it can be an echo chamber, but I try and follow people that have different opinions than me. But the algorithm tends to show you who you engage with.
It does.
So,
it does.
Yes, I do think that's a worry. But on the benefit side, people that really want to learn in the startup world, follow John, follow me, and we'll see the other people that are talking about the things we are, that both of us, I think, aspire to put out really actionable content that people can get value from.
Yeah. I agree. And that's why we're having this conversation, because you do like exactly that. It's actionable content. And that's always been like a little bit of a mantra of mine. And sometimes the engagement is less on the like the actionable content side of things, you stick a selfie up and say something stupid, but that's just playing the game. But I think long term, the people who want to get value out of it, they can. So that's cool. I really like that little segue that we had right there. But so let's talk a little bit about you. How was the intro that I gave you? Is there anything you wanted to add to that? And tell us a little bit about your story and your journey.
Well, that was spot on.
Great.
Yeah, no, thank you very much. That was great. Yeah, I think the biggest thing is like the transition from corporate and real estate into angel investing in startups that people are like, that doesn't make sense. But the thing that like the loop I like to close is that, when I was looking at real estate deals, I was looking at all these different businesses. So I would have to underwrite the tenants in the buildings to make sure those tenants could pay the rent, pay the mortgage, which was what I was providing. And so I got to look at all these businesses and I would dig into their financials. I would dig into how successful they were and how, what the risks of those businesses was. And that really taught me like how to get comfortable with underwriting businesses and looking at numbers, looking at the financial models, building financial models, and talking about the money side of things, which is really what got me excited anyway. So it's been a great transition.
Cool. And so actually on the money side of things, as an angel investor, money versus vision versus product versus people, where does it sit, or where do you sit on that, and how important are all of those kind of pieces that go together to form a startup and an investable project?
Yeah. The first thing I always look for is the person. I invest very early stage, usually like pre-seed. I've invested pre-product on a number of things. So the person is the most critical in that situation. Do I think they have the expertise? Do they have the background? And do I think they're going to be able to execute? Because there's so many people out there that have great ideas, but if you can't, execution is everything, as you know. So
yeah.
That's what it comes down to first and foremost. And then of course, they have to have a good idea or good product or whatever it might be.
Yeah. I mean, I always say that, Facebook wasn't the first social network. They just executed better, and, the rest kind of followed. So the execution is key. Do I think this person's going to be able to execute, or people, if it's a team? First-time founders versus second-time founders, where do you sit on that? Or first, second, third, fourth, whatever.
Yeah. I mean, I love a second-time founder or third-time founder because they've been there, done that, and they're going to work out all their mistakes on the first ones. But I'm okay with betting on first-time founders too. One of the most important things I look for in those people is that they know their strengths. They've got to know what they're good at and what they need to hire for, whether it's a fractional person or a consultant, or even getting an intern, that can help you in some aspect that you're not good at. It's that if that person knows themselves and say, I know this is my strength, that I can let other people do the other stuff that I'm not as good at, then I know they're going to be in their zone of genius and be able to go. But I do think there's one critical thing that every founder needs to have, and that's the ability to sell. They need to be the first salesperson for their product or service, and they have to be able to execute on that, because people in the early stages, you want to hear from the actual voice, the founder, the one that's responsible for everything.
Yeah, and selling's hard.
It is hard. It's really hard. I hate it.
Yeah, but a lot of people do, and I wonder whether it's a skill you can learn or not. I personally think you can, and actually some founders, I think, make better salespeople than they realize, if that makes sense. Because actually, for me, I think a lot of the art of selling is actually not selling, if that makes sense. And so, being this kind of traditional salesperson puts a lot of people off. It's kind of inviting people and adding value, and being able to bring people into your mission and engaging with them, and all of those sort of soft skills that go into selling that I think a lot of founders actually have. They just don't realize they have it.
I totally agree. It doesn't need to be some huge hard push. Like, you can find your own style, and it's about connecting with the other person and showing how you solve their problem. And that's really the key. And so if that's a soft sell, if that's developing a relationship, I mean, there's some people that will come to me and they'll say, I know I want to work with you. I've already done all my research. I'm ready. And so I don't have to, they've talked to people, they've followed me on LinkedIn, they know what I offer. So they're right in. But there's other people that I've developed relationships with over a couple of years, and then they're finally ready. And that's okay. I think the authenticity and being true to yourself, if you aren't that, then it's going to, that people are going to feel that and see that. So doing it in a way where it's authentic for you, you feel good about it, then you're golden. But you've got to find that style and find the way to do it.
And so people talk a lot about storytelling and that sort of thing. Where do you sit on that and the importance of storytelling and what makes a good storyteller?
Yeah, it's kind of a cheesy word, I think.
It is. It does get bandied around a lot.
Yeah, but the concept itself is real. I mean, people remember stories and feelings they had from talking to somebody rather than the actual words or stats or things like that. So
sure.
And there's a lot of times when you're, in terms of selling, for example, you can show a transformation of somebody that is like the person you're trying to sell to. They're going to be like, oh, I want that result. This person can help me get that result. So rather than just say, I can sell you I'll sell you this service that's going to make managing your email box super easy. Well, that doesn't really, like, how, why, I could, if I said, John, I worked with Joe and I developed a system for him that took his inbox from 10,000 to 2,000 in a week. And he is implementing it in this way. And it's given him this many hours back in time. And, telling the perspective of that shows the real transformation.
Yeah. Right. Yeah, no, that's really cool. So let's talk about startups and founders kind of doing the outreach campaigns and getting in touch with people like yourselves. Because I saw a post of yours that you've got pinned to your profile. And I quite like it. And I'll bring it up. It's something like, don't pitch me or something along those lines. Don't send me your deck. That's the one. Yeah. So I really like that one because it's kind of, you say, make it concise and all that kind of stuff. Talk us through that and talk us through the mistakes that you see people making over and over again and how they can overcome it. And, can I still do cold outreach and all of these? How do I break down these? How do I get a conversation? Yeah.
For all of us out there that have investor in our profiles, I'm going to speak for all of us there because you get a lot of inbound that is not relevant to you. And good investors have a thesis, and good investors that have a thesis will put the thesis out there for people to see. If you look at my LinkedIn bio, it's like at the very top, and it's on my website, and it's I talk about it all the time. So if you don't fit my thesis as a startup, I am not going to invest in you. So don't waste your time with me.
Yeah.
That's the real point, is you are going to get so many no's in the process of going out for investment. Limit them by going after people that might say yes. Like if you don't fit my thesis, I'm for sure going to say no. Sorry. Like that I have my thesis for a reason. But so in terms of I get these DMs that are pages long, decks, links, watch this video, do this. I don't want to do anything. Like I get so many messages. Don't ask me to do something that is like, don't make me figure it out. You tell me. What I want is for you to tell me why I'm a fit. Do it as short as possible because it takes so much time. And I know you want to tell me everything because you think I need to know everything. I don't. I just need to know how you fit. Then we can start a conversation and a dialogue.
It's a conversation starter. So how short is short?
Very short. 3 bullets max.
Yeah. Okay. Yeah.
Tell me, what one bullet is why I'm a fit.
Yeah. I was going to say, so say you've done your research and like, this is why I think you're a fit. And these are the reasons why, et cetera, et cetera. Yeah.
But one bullet is why I'm a fit. The second bullet is who you are.
Yeah. And
then the third bullet is what problem you're solving, what the product is. Because those are the things I want to know. Like, are you solving a real problem and why are you the person to be solving it? Like, if you can do that. And it really short, really, really, really short. Not even, just as.
But this is sales. This is
Yeah.
basically sales. This is what I do, So it's the same thing. Like, I wouldn't reach out to a company that couldn't afford our services or didn't need or want our services. I'm not always going to get it right. But if I run it through a script of like Apollo and stuff like that, and I churn out like 2,000 emails and stuff like that, the chances of me getting a response are literally 0 to none, And so I spend more of my time looking at people who are relevant to me and kind of going, okay, I can see the software that they're using. It's outdated. They might need our services. And here's the reason why. Yeah. Bang, 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 3 points,
Exactly.
You're still not going to get a huge hit rate. You're still going to get a lot of no's, but you'll massively increase your chances.
Exactly. Like, just give yourself a chance. Like, the spray and pray approach does not work in this kind of situation. And so, plus it's so hard. I was actually DMing with the founder the other day on LinkedIn who is like really, really bitter because everybody's saying no to him asking for investment. And he's coming across as very bitter on LinkedIn. And I said to him, I'm going to give you some unsolicited advice. Maybe talk about the positive things you're doing, because if you're out there telling me nobody's investing in me, nobody's giving me a shot, I'm not going to give you a shot either.
No.
Because if nobody else is, then they must know something I don't. So I'm not either.
And FOMO's real with investors, right? Or is this the thing?
Totally. FOMO is huge. Absolutely. Yeah. I've done deals because other people that I like and trust and are doing them. And I've not done deals because people I like and trust say I'm not doing that deal because of, so it's very, very, like it's very critical to
so on the positive side, it might need you to get that one positive conversation, because then the snowball effect might happen, right?
Yes, exactly. Yeah.
So actually on that one, the kind of that goes a little bit to the building the brand and the network and all that kind of thing. So when you've met a founder who has got it, and we did an interview with a founder last week, and he just has it, right? Like, I get a feeling, I'm not even an investor, but I just know. What is it that kind of strikes a chord with you when you meet a founder that just has it? What are the qualities that they tend to have as a general rule that you just go, yep, this person?
I like a founder that is really thoughtful. They can speak concisely and simply. They have the answers, the numbers at the ready. I'm okay if a founder says, you know what, that's a good question. I don't have that at my fingertips. I'll come back to you. That's okay. You don't need to have every single answer. I want to see the passion and the ultimate goal of your life is to solve the problem you're solving, and that you've built yourself around it. I also really like the people's background. Like, I just invested in a founder who she's just built to be a founder. She worked at Bain. She was like employee number 3 at one startup, number 5 at another, 2 very, very successful startups. She's done all the research. She knows the space that she's in. She got a great technical co-founder. Like, she's just putting together all the things, and you can really see that, people that see opportunity too. Right. That I really like. People that can take data and see a way through and find an opportunity. Yeah. I think that's a real skill.
Oh, 100%. So this specific founder that you were talking about, does she have found a market fit in a sense that the problem that she's solving is related to her previous career or something that she'd personally been involved in previously?
Yes. Right. Yes. Very, very, very much so.
That's like 90% of the cases, right?
Yep. Yep. I love the term founder market fit. I think we all talk about product market fit all the time, but founder market fit is just as important, in my opinion. It is.
Well, yeah, because it comes first, right? And the product kind of follows later. So you're based out of NYC, which is awesome place to be, and, a great kind of startup community there. But you do invest, across the pond and globally, right?
Yes.
Yeah. So talk to us about the difference that you see in, say, like the NYC ecosystem, or, the US even versus, say, Europe and that sort of thing, other than just probably the ticket sizes are larger in the US.
Yeah. I mean, New York is, I think giving Silicon Valley a run for its money, New York Tech Week is really becoming a huge thing. And
really, that's cool.
yeah, it's great. And there's a lot of energy around it. And there's a lot of cool stuff going on, a lot of meetups, and a lot of people really making big waves. So that's really fun to see. I think Ireland is doing a lot for startups, which I think is really cool. I'm an investor in an Irish.
You have a company there, right?
Yeah.
Is that the Enthuse Foundation?
No, that's Outcast Brands. Outcast
right,
Brands
my bad.
Yeah, is a Irish spirits company. So we have Blood Monkey Gin and Two Shores Rum are our brands there. And so I did during it was still COVID, I did a accelerator through Enterprise Ireland with the founder of that company and met some great founders and sort of have kept up those relationships and met others. So I think Ireland is such a small country, but there's so much opportunity there and so many people. Enterprise Ireland does so much for them and stuff. So it's really fun to see that. It's like a mini New York and all the stuff going on. But yeah, it's great. It's really I do a lot virtually, like a ton of my day is spent on Zoom, but getting to be in person events and meeting people and talking to them, there's no substitution for that. So it's fun.
Right. And so generally speaking, are your investments based in the US or are you kind of open to opportunities on the global stage?
I have a Canadian company, an Irish company, and an English company. And right now, and I've sort of taken a step back from the looking at global opportunities because I've found it's complicated for financial reasons, tax purposes, all that kind of stuff. And I do really like to be helpful to my founders. So even though everybody's just a Zoom away now, it does feel like I can help them more in the US and my network is more in the US.
For sure.
That being said, I do work with founders outside of the US to help them with their pitch strategy, and they're getting their stuff ready to go fundraise and wherever they are. So that I think is a universal thing, how to talk to investors, what pitch decks should look like, how to practice answering your questions, all that kind of stuff. So
yeah, and there's a ton of value in that actually. And there's a few people out there doing that to varying degrees of success. And, I'm often skeptical of that. But in your case, like when you're actually on the other side as well doing it, I think it really kind of adds a ton of value. So I think there's something there for people to get in touch with you about. So let's talk about kind of what you're doing, like moving forward and the kind of trends that you're seeing in the ecosystem, like the angel investing. Has it evolved in the past few years, and where do you see it heading? Is Trump going to have an impact? I mean, I don't want to talk about Trump too much, but is that going to have a play or at all, or is the US still going to be pretty strong in the kind of the startup sense?
It's actually interesting that you talk about or asking about that. I'm on a panel next week with people from the SEC, the Security and Exchange Commission of the US, which is what kind of governs the financial and investing and the stock market and that kind of stuff. So they're going to talk about what happened in 2024 and what they're looking for in 2025 in terms of regulation. There's the regulation around who can invest in startups and being an accredited investor and all that is very complicated and prohibitive, frankly, for a lot of people who may be knowledgeable but don't meet the financial criteria or whatever. Right. So it will be interesting to see what comes out of that. Not to get too political, hopefully the economy will grow in the next 4 years. That's what I'm hoping for. And
so what we're all hoping for, right?
Exactly. So with that means more people have money to invest in startups and startups will have access to capital. But I also think there's a lot of other capital sources besides just investors out there, whether it's grants, even looking at loans that make sense for your company and yourself personally, if you have to sign personally. So it's not, I tell every founder, like, don't just look to angels and dilute yourself. Like, look to what other sources of money make sense. Can you get non-dilutive sources so that when you go to exit, you keep more of your company?
Yeah, and that's a really good point. Like, especially on the tech side, it's getting easier to build that initial product without, significant funds. And, that's going to sort of, how that changes is probably a separate episode. But like that kind of initial bit, and you as an angel investor, and then going up to say pre-seed and that sort of thing, how important is that if like you've seen the founder kind of put the hand in their pocket, so to speak, maybe they've saved up some of their own funds or taken out a loan and that kind of thing, and like back themselves to a point?
It's critical for me. I mean, if you have funds to do it, great. If it's your time and your expertise, that's also good.
Uh-huh.
I don't, I will say I've turned down deals where the first thing that the founder was going to use money for was to pay themselves a big salary.
Sure.
Not going to happen.
No, that's interesting.
Yeah. I don't want you to starve, but I want to keep you a little bit hungry, right, knowing that your payoff is coming.
Yeah.
So that's critical. But like you said, John, in terms of the tech stuff, if you can build a no-code, low-code MVP and show traction in that way, that is so huge. There's so, in the past, people would have to have a huge build before they could even take on a customer. Now, if you can show that you can get customers for your product, even if it's at its most base level without a ton of cash raised, that's just going to put you in a better position to raise at a higher valuation down the road, keep more of the company for yourself, all of that good stuff. So taking advantage of that. And then we have to talk about AI too, right?
Well, we do. Yeah.
Right? There's so much out there. I do think that there's a lot of founders out there that are building AI for the sake of saying it's AI.
Yeah. And a lot of these companies just aren't really AI. There might be some small element of machine learning, or AI forms like 10% of what their product is, but actually it's not an AI product as such.
And they're not always solving a real problem too.
No.
It's so that's the.
So has it got to a point where you as an investor would see an AI quote unquote opportunity and kind of like approach it with a bit of skepticism initially?
Totally.
Yeah.
It's like the blockchain buzz a couple years ago. And, the AI is now the buzzword so I want to see the problem you're solving first. And if you're using AI to do it, great.
Yeah.
That's awesome. But it still comes down to the problem. If somebody leads with AI, I'm building an AI tool, then it's automatically a red flag, because it sounds to me like you're trying to use the buzzword of the moment.
Sure.
What I'd rather hear you say is, I am building a tool to solve people not being able to manage their email box, and it leverages AI. It leverages large language models or whatever it might be. I'm making that example up, but you
sounds
get
like a good product.
Yeah, I know it does. I need it. That's why
someone should build that.
Totally.
Look, Katie, wow, that's like gone crazy fast. So if people want to get in touch with you to talk about your advisory stuff and that sort of thing, what's the best way that people should get in touch with you? Because I'm sure there's a ton of value there. Obviously, follow you on LinkedIn, because like we discussed at the start, you put out some amazing content there. So that's a great place to start. But if they actually want your individual help, how should they get in touch with you?
Yeah, they can go to my website, which is katiedunn.com, KATIEDUNN.com. I'm sure you'll put it in the show notes.
I will.
But they can go there and find out how to work with me. But yeah, LinkedIn, I answer every single LinkedIn DM I get. That's a good place to. I'm better at managing my LinkedIn than my email, I will say.
On that one, what would you say? Don't you think that somebody should build a proper LinkedIn mailbox so that you could manage your LinkedIn mailbox a little bit better? Or do you use one at the moment?
I don't use one. I just use, yes, I do.
Would you use one?
Yes, totally.
Yeah. So I'm just validating in real time a concept that I've been working on, which I've now just thrown out to the ether. But I don't care, because I'll just build it better than everybody else. So that's okay.
Yeah. Yes, that would be fantastic.
Yeah, I figured. Right. Yeah. Cool. There we go. We're on our way to validating a new product.
Good.
But Katie, thank you so much for your time. It's been super interesting talking to you. Thank you guys. If you enjoyed this episode, please do like and subscribe, and we will see you on the next one.
Thank you,
everybody.
John.
Thank you, Katie.
Thanks for tuning in to Launchbase. If you enjoyed this episode, don't forget to subscribe and share. Stay tuned for more insights on tech, funding, and product launches. See you next time.